What's up, my fellow wealth creators? Matty Ice here. In this video, we're going to talk about the difference between bank loans and policy loans, the pros and cons, why you might use one over the other. I'm going to go through the benefits of policy loans. They are an incredibly powerful part of the infinite banking strategy that allows us to accelerate the wealth building process in our lives, build wealth in multiple places at once, recapture lost opportunity costs. It's really powerful. However, there are some cases where it does not make sense to use a policy. And sometimes, I know I was guilty of this when I first started my infinite banking journey. I wanted to use my policy for everything, every investment in my business and purchasing my car and doing real estate and all this stuff. And that's fine. But as you start to implement this strategy more frequently, and you start to capitalize your own private banking system a lot more, you start to become more strategic, more intentional with when you use your policy for certain things versus when you don't, all right, to make sure that you're maximizing the benefit as much as possible. So at least for me anyways, I'm not trying to necessarily cut out the bank from my life entirely. I do think it makes sense sometimes to utilize traditional financial institutions. And obviously, as I capitalize my private banking system more, I'll probably use banks less and less. But for the majority of people, we're still going to rely on financial institutions for some things. And that's important because we want to make sure that we're using our policies for the maximum benefit possible, for the greatest potential possible. All right. And that's what I want to cover in this video. All right. So real quick, guys, if you don't mind, if you do find the video helpful, just do me a solid and hit that like button. Really appreciate it. It does help get the video out. Make sure you subscribe, come out with these videos all the time, and make sure you get my free Infinite Banking Masterclass down in the description below. I walk you through step by step my entire infinite banking journey, my policy, how I use it, etc. And then I also have a book coming out as well. It's called The Infinite Banker. So make sure you check that out too. I don't know if it's going to be live by the time you watch this, but I will have a link down below at some point. So make sure you get your hands on that. All right, let me share my screen and let's hop into this. All right, so bank loans versus policy loans. Let's get into it. All right, I want to start with the benefits of policy loans first, because most people understand how bank loans work, but they're not very familiar with how policy loans work, and therefore they don't know the advantage, what some of the advantages could be over taking going to the bank for a loan. All right, so we'll start with that, and then we'll finish up with some specific scenarios and situations where it would still make sense to go to a bank to get a loan, regardless of all of the additional benefits that we get from taking policy loans. So we'll get to that in a minute. But let's start with these particular benefits. So one of the things I really like about policy loans is the streamlined process for getting access to capital. There's basically no application process. I'm going to skip around here a little bit. This is just to keep you on track here, but beyond getting approved for life insurance, there is no approval process for getting a policy loan. So for example, when you go into a bank, you have to fill out an application. You have to tell them what the money's for. They're going to check your credit. You might need tax returns, income statements, bank statements. You need debt to income ratio, all this stuff. None of that applies to when you're getting a policy loan. There's no credit check or credit reporting. You don't need tax returns. There's no income requirements. The only limitation is how much cash value you have. And there's only two questions that the life insurance company asks. And it's how much money do you need, based off of, up to how much cash value you have, of course. And then where do you want us to send it? That's it. You don't need to tell them what it's for. Yeah, I literally, when I take a policy loan, I log into my online portal or call the life insurance company. I tell them how much I need, and it's in my account in 1 to 2 business days. Versus how long does it take for a bank loan to get approved, guys? All right, so it's a much more streamlined process for getting access to capital. With that said, one of the disadvantages of this, of course, is that you are limited with policy loans. You are limited to what your cash value is. Most life insurance companies will allow us to borrow up to around 95% of whatever our cash value amount is. Therefore, you are limited based on how much you are able to capitalize and fund the policy with. Whereas with a bank, you walk into a loan, you can get money that you don't have access to. Like, if I have $50,000, for example, if I have $50,000 of cash value in my policy, but I need $200,000, well, I can't take a policy loan for $200,000. They're not going to let me do it. I'm limited. I have a ceiling, and that ceiling is based, like, how much I can borrow. And that ceiling is based on what my cash value is. So pros and cons to everything. Now, if you're able to fund and capitalize your policy really well, And of course, as it starts to grow over the years, you could get to a point where you don't need banks as much. But these are pros and cons, advantages and disadvantages that I want you to be aware of. But as far as the approval process goes, oh my gosh, it is so nice just to go into an online portal, or call a company up, say, hey, put this much money into my account, and it's there in 1 to 2 business days. It's awesome, guys. So really streamlined process. Now, here's the thing. One caveat to this, or one workaround, I should say, because you do have to get approved for the life insurance policy. Obviously, this is life insurance, so you're going to have to go through a med exam. They're going to check height, weight, get a blood sample, urine sample, all that stuff. And so you have to get approved for that. With that said, if you do get denied for whatever reason, you could always purchase a policy on a loved one, a spouse, child, whatever. You could purchase a policy, be the policy owner, and have access to the cash value and fund it just like you would your own policy. It's just you're not the insured. That's it. That's the only difference. All right. So the insured is when the insured dies, whoever that is, then the death benefit gets paid out versus if you were to pass away. That's really the only difference. So there is a workaround to that, but there is no approval process or application process whatsoever when it comes to getting the policy loan. All right. Really powerful. I love it. There's no repayment structure. Now, the first thing that I want to say about this is, even though we don't have a repayment structure or schedule, you want to pay this back just like a bank loan. All right. This is essentially our own private banking system, guys. And if you were to get a bank loan, you would pay it back every month, obviously. Otherwise, there's going to be massive negative financial consequences to that. All right. So if you have to pay a bank loan back, why would you not pay back your own private banking system? All right. Well, you would, and you should. Okay. So even though there's technically no repayment structure, you still want to be putting your own repayment structure in place. I just want to make that clear. With that said, the flexibility on this is amazing, guys. And the reason there's no repayment structure is because it's a collateralized loan. The policy loan is collateralized by our cash value. And so the life insurance company is getting paid back regardless. All right. But that flexibility is so nice. Let me give you an example. Let's say you're a business owner and cash flow tends to fluctuate. Maybe you're in a seasonal type of business, and you take a policy loan to purchase equipment or to cover payroll or so something like that, right? Or acquire an asset. All right. But then you fall on hard times. Cash flow is a little tight. Well, you could skip repaying the policy loan for 2, 3, 4 months. I mean, it's really up to you. Obviously, you want to make sure you're not putting yourself in a position for the policy to lapse. Okay. So we don't want to over leverage ourselves. And when cash flow returns and stabilizes, we want to be repaying that policy loan, preferably making up those payments that you missed. But having that flexibility is so nice. Because can you imagine calling up your lender, the creditor, and saying, hey, I can't pay you for 3 months because my cash flow is fluctuating? What's going to happen? Well, you're going to get late fees, penalties, additional interest. They could, foreclose, or repossess the asset. It's obviously going to hurt your credit. There's a lot of negative consequences to that. If you don't make a payment on your policy loan, the life insurance company is not calling you up demanding payment and threatening your credits and other additional penalties and stuff like that. That's not going to happen because it's collateralized by the cash value. So having that flexibility is really nice, as long as you're responsible with it. Of course, you want to always pay back your policy loans, guys, but having that flexibility is really, really nice. This is also great for buying cars. I don't think purchasing vehicles is the best way to use a policy, but if you have it capitalized enough, it can be one of the best ways to purchase a vehicle for that reason. If, for example, if I were to fall on hard times, because the first thing I used my policy for was to purchase a vehicle. And it's nice because my money continues to compound. We'll get to that in a minute. But also, if I fall on hard times and I need to take a break from these payments again, like paying back the policy loan, I don't run the risk of losing my car. Because if you don't pay your car loan for 2-3 months, they're going to come repossess your vehicle, guys. That is not the case when you use a policy loan. So there's a lot of flexibility, a lot of peace of mind as well. So no repayment structure. I think that's a really powerful feature as long as it's used responsibly. There's no usage restrictions. You could use the policy loan for whatever you want. Now, again, this comes with responsibility. We don't want to, at least I wouldn't recommend, using your cash value, using the policy loans to go on these extravagant vacations and, buying, purchasing liabilities, basically anything that's not going to accelerate the wealth building process in your life and move you closer to achieving your financial goals, I don't really recommend. With that said, there are no usage restrictions. So when you go get a bank loan, you need to tell them what it's for. They may or may not deny it you for that, right? If you have something very specific that you need the money for, but banks don't usually lend on it, well, you're probably not going to get approved. With policy loans, that's not the case. You can use the money for whatever you want. Principal put back into cash value. So basically every payment that you make back towards the policy loan is instantly restored in cash value and available again to use. That's really powerful. It's very similar. It's almost exactly the same as like a revolving line of credit. The difference is a revolving line of credit is not compounding your wealth over time, which is the next point we'll get into. But it's nice that, like, for example, if you have a bank loan and you're making payments, you like, let's say I make a $500 payment on my bank loan. I can't then call up the bank loan, assuming that this is an amortized loan. I can't call them up and say, hey, like the next day and say, hey, sorry, but I actually need that money back for another opportunity or expense that came up. That's not going to happen unless you have a line of credit, right? But with a traditional type of bank loan where it's amortized and there's a payment schedule and all that, you can't access that money again. That money has been given to the financial institution for the rest of time. All right. With a policy loan, it acts very similar to a line of credit where that cash value is instantly available again. Really nice feature. And my favorite feature, I think, which is what I believe is one of the most powerful benefits of policy loans, is that our money continues to compound in the policy as if we never touched it, because we didn't. And this kind of addresses a very common, somewhat ridiculous argument against whole life insurance, infinite banking, etc., using policy loans. People say, why would I pay interest, or ask, why would I pay interest to borrow my own money? You're not, guys. You're borrowing the life insurance company's money, which is what allows our money, our cash value, to continue compounding in the policy essentially for the rest of our lives, as long as we have that policy. Is your bank line of credit doing that? Is your bank loan doing that? Absolutely not. And yes, there is a little bit of simple interest that we pay on these policy loans, but it's peanuts in the long run compared to the amount of compound interest we're going to earn over our lifetime, right? So that, to me, this is one of the most powerful benefits of taking policy loans versus traditional bank loans and lines of credit, right? Really, really powerful stuff, guys. All right. With that said, so amazing benefits, okay? But that doesn't mean that we're always going to use our policies, that we're going to take a policy loan for every single little thing in our lives. We probably, for the majority of us, we can't do that, because it brings us to the first point here, is we might not have enough capital or cash value. We might not be able to fund and capitalize our policy enough to completely eliminate banks in our lives. So, for example, if I have $50,000 of cash value and I have there's a $200,000 or $500,000 property over here that I want to acquire, well, I need to go to a bank to get the money that I don't have access to. With policy loans, we only have access to up to about 95% of whatever our cash value is, right? So one scenario where it would make sense to use a bank loan is obviously if you need more capital than what you currently have for whatever that particular reason is. Now, there could be an argument made that you could use a policy loan to fund the down payment for, if it's real estate, for example, right? That way, the cash you have sitting over here, you could use for something else. And the money that you borrow, that policy loan, your money is going to continue compounding in that in your policy. And now you're starting to build wealth in multiple places at once. Obviously, every situation can be different there. All right. But in general, if you need more capital than what you currently have in cash value, then you have to go to a bank. Now, if you eventually get to millions and millions of dollars of cash value and you don't really need banks anymore, okay, fine. But for the majority of us, including myself, we're probably going to need to use the bank for these types of things, buying a home, buying real estate, stuff like that. All right, Next reason for using a bank loan over a policy loan is a very high interest rate variance. I guess maybe I should say difference here, but whatever. If the policy loan interest rate loan, the interest rate for the policy loan, let me make sure I can speak here. All right, is much higher than what I can get for using a bank loan, then I might want to consider a bank loan. So, for example, if my policy loan interest rate is 7%, but I can get a bank loan for 4%, that could make sense. Now, not always, because there is a difference between simple interest on a policy loan, paying that, and paying paying interest on an amortized schedule over a certain period of time. There actually is a difference there. However, the interest rate is something to look at. Okay, so if there's a very big difference in the interest rate, that could be a reason to use a bank loan potentially. High opportunity cost. This really comes down to, this part comes down to how you use the policy. Like, what are you taking the policy loan for? Are you using it to acquire assets, or are you using it to acquire liabilities? Here's the thing, guys. We don't get rich acquiring liabilities, typically anyways. Now, what I will say is that using the car example, cars are liabilities for most of us, okay? Because it's not putting money in our pocket. It's a depreciating asset. We're not going to build wealth that way. With that said, using a policy loan, I kind of alluded to it earlier, can be one of the best ways to purchase a vehicle for a number of reasons that I mentioned earlier. But we're recapturing a lot of that lost opportunity cost that we would give to a bank or paid in cash. When we pay in cash, that money is no longer able to earn interest for us. So if we take a policy loan instead, our money is continuing to grow in the policy, and it just costs us a little bit of simple interest. However, here's a scenario where using a bank loan for a vehicle would make sense, where let's say, I have my policy, and I set it up to do real estate, for example. Okay. Well, if I use a large portion of my cash value to purchase a vehicle, because I learned that that's a very efficient way of buying a vehicle, but then an opportunity in real estate comes up for me, or whatever way you build wealth, that opportunity comes up, but now I don't have enough cash value and capital and liquidity to take advantage of it. What's the opportunity cost there, right? So in that scenario, it can make sense to finance the liability or whatever, the depreciating asset, with a bank loan, use the bank's money, and then keep my capital available for wealth building opportunities, right? So that's something to keep in mind as well. All right, and then I would say, I kind of went back and forth on adding this bullet point here for a specific reason I'll get to in a second. But like, if you want structure and you want an automated repayment schedule, and that just works better for you, then obviously bank loans will be much better, because there is no like actual payment schedule from the life insurance company when you take a policy loan. You are in control of that. You need to take responsibility for that. My counter to this, just playing devil's advocate on my own stuff here, is that, like, if you have a problem with that, then why are you even taking the policy loan in the first place? Like, not to mention that it's not that difficult to put together an amortization schedule for yourself and just put it on your calendar every single month to make your policy loan repayment. So I don't think this is like a major reason to take a bank loan over a policy loan. But I know some people out there that they like structure. They like when things are completely automated, and that helps them show up in their business better, or their job better, or whatever. Right. So these are just some of the primary reasons I think you would use a bank loan over a policy loan. It's certainly not an exhaustive list whatsoever. These are just the main things, main reasons that I've seen, I've experienced, I've learned about when comparing whether or not to use a bank loan over a policy loan. So I hope that was helpful, guys. Hope it was educational. Hope you learned something. If you have any questions, drop some comments down below. We'd love to hear from you. Make sure also you take advantage of all the additional tools, training, and resources that I have for you guys in the description. I have a free Infinite Banking Masterclass. I have a recommended reading list as well to take your knowledge to the next level. I also have my own book coming out very soon. I will link that down below. It's basically just sharing my infinite banking journey. Pretty excited about it. Pretty cool. So make sure you check that out. But hope you guys are crushing it, and I will talk to you in the next one. To your success. Matty Ice is out.